Would you rather try to hit a narrow target or a wide target? Hi, this is David Modell looking at the markets. I want to show you an options trading strategy called the Iron Albatross. And this is more for medium to more advanced options traders. If you're more of a beginner in options, then feel free to check out my options trading playlist, which has some beginner type of options trading videos, as well as medium and advanced ones as well. So what is the Iron Albatross, which I'll be talking about today? It's really just a type of iron condor. It's an iron condor in which the put spread that you're selling and the call spread that you're selling are further apart, okay? It's like a very wide iron condor, and I'll explain this. Right now I'm using optionstrat.com. I want to give them credit for their website. And so if you go on OptionStrat and you type in, let's say AMD stock, and you could type in any stock you like. But I typed in AMD and I went to Iron Condor. And they're going to put up an Iron Condor that's probably medium in width. Okay, so the put spread and the call spread really are not that far apart. There's not a lot of room here between the put spread that you're selling and the call spread that you're selling for the Iron Condor. And then you go down and you look at the risk reward profile here. And so if today the stock price is around here, then you're hoping that the stock price, it might drift around, but you're hoping it doesn't drift too far up or too far down, because this is the target here. You want it to, upon expiration, you want the stock price to be in this little green area. And notice that there's a lot more red area altogether than green area here. And so you're aiming for a rather narrow target here, because if the stock price drifts too far this way, you lose money. If it drifts too far down this way also, you lose money. If it drifts too far up or down. And of course you could take profits earlier. You don't have to wait until expiration. But notice that you don't make a lot of money if you take profits early. If you want the big bucks, okay, if you want the big money, then you have to wait a little bit until it gets closer to expiration. But then there's that risk that the stock price will drift too far up or too far down. And so you're really insisting you need the stock price to stay in a very narrow range and hit a very narrow target here. So that's a regular iron condor. What if, and by the way, what's appealing about a narrow type of iron condor is that your max loss is very small compared to your max gain, okay? So if the max profit on this trade here is $375, which is your credit that you get up front, and your max loss is only $125, yeah, that's pretty appealing. It's very tempting to have a narrow iron condor, but look at that target you have to hit. It's also very narrow. And so, yeah, you're kind of gambling here. You're putting up a small amount of money to make a bigger amount of money, but you're paying a price in terms of what's the probability of you making that max profit. It's kind of small. So let's widen the distance between the put spread you're selling and the call spread. So we went 5 wide on both of these. Let's pull this back. Let's pull this back to, let's say, over here, and still make it 5 wide though. And then we're going to try to make the wings, as they call them, the put spread and the call spread that you're selling, we're going to try to make them equidistant from the current stock price, or at least close to it. All right. So let's see how that changes things. I pulled the put spread you're selling way back here and the call spread you're selling way up here. And notice that the wings are much wider. So this is the Iron Albatross, which is a relative term. There's no exact formula for how wide it has to be called an albatross instead of just a regular iron condor, but this is pretty wide. And so what does it look like here? Well, the max profit, $227, is less than the max loss, $273. But it's not that far apart. It's almost risk one to make one, as they say. But look at this now. Look at how wide, how big that target is. Oh, what a difference, right? So AMD stock could drift this way, could drift that way, could drift up, drift down, could drift quite a bit up or quite a bit down, and you could still make your maximum profit or pretty close to it. And so, yes, it is true with the iron albatross that, yes, okay, you don't have some really small max loss and some really big max profit, all right? That is true. But your probability of getting that max profit or close to it is so much bigger. You're aiming at a much wider target. And so if AMC stock, let's say, or whatever stock it is, if it starts to drift up, you're not so worried about it. You could still profit and get a pretty decent profit. If it starts to drift downward, no big deal. That's a nice big target here that you're aiming at. Now, can you go even wider? Can you make that albatross even wider? Sure, you can. Let's take a look and see what that looks like. So let's pull the put spread that you're selling way back here. And we're going to try to make them around equidistant again. Let's go a little further here. There we go. That's about equidistant from the current share price. Well, right now, you may have gone too far because the max profit is $152. That's what you collect up front for a credit. But now your max loss is more than double that, right? And so you're risking 2 to make 1, so to speak. And on the other hand, look how wide this target is. It's hard to miss at this point, right? All right. Don't get the wrong impression. I mean, if you go up here, you'll start losing money. And if you go way down here, you start losing money. But this is a big target. And so it might feel good to put on this kind of trade, but risk 2 to make 1. I don't like that as much. I like the other one better, where it was pretty close to risk 1 to make 1, meaning that the max loss and max profit are about the same. I'm kind of liking that one better. Let's see if we can reproduce that here once again. Yeah, here we go. Okay. Max loss 273, max profit 227. That's pretty close. Not quite risk 1 to make 1, but pretty close. You get a nice wide target here and a fairly wide iron condor, and so that would qualify, I believe, as an iron albatross. So feel free to go to Options Strat or whatever you like. There's another one called optionsprofitcalculator.com, and it's pretty similar to Options Strat. And so you go to your iron condor on optionsprofitcalculator.com, and you type in whatever it is. It actually has more to put in here, and you get a pretty similar looking chart here of max profit and max loss, that kind of thing, or whatever you like to use. Just play around with it on your broker's platform and see how wide you want to make those wings. But remember, if you make them too wide with the iron albatross, then you might be ripping yourself off a little bit because you're accepting too small, probably, of a premium up front, and you're risking too much money. So find that kind of happy golden medium there between max profit, max loss, and probability of profit. How wide is that target? So I hope you like the iron albatross. I'm encouraging you to make it just right for you, because everybody has a different risk tolerance. If you like this video, please give it a thumbs up on YouTube and subscribe to my YouTube channel, and check out my options trading playlist for more videos on this topic. Thanks a lot. I appreciate it. I will talk to you again soon.